Okay, I'm continuing to learn how to set up the process on YouTube. We are now up there. I'm going to go ahead and start the recording, and away we go. Okay, good morning, everybody. This is Dennis Wilborn. I want to welcome you all to this week's session of How to Make Money Trading Stocks. This is a weekly live streaming video that we do. I want to thank everybody for joining us today. I also want to thank Steve Ferreira from a retired University of Hawaii professor. Steve, what were you a professor of? I'm going to take him off mute.
Me? Yeah.
What were you a professor of?
Of plant pathology. It was in agriculture, and I worked with plant diseases.
Oh, okay, cool.
Control and management. Yeah.
Did you have your doctorate in that and that kind of stuff?
Yeah, that's correct. Yeah.
Okay. So we should actually refer to you as Dr. Steve?
If you like, but that's not something that rings off my ear. Yeah.
Okay, Steve's a really good friend and an absolutely excellent trader. He's such a wonderful addition to what we're doing on Fridays in the brief 15 minutes that we get to share with each other. So let's kick off and get going just to see what's going on. I hope everybody is doing well this Friday. Remember, on Monday, it is Veterans Day. I believe the market is open on Veterans Day. The thing about it is always remember, thank a vet, because that's what, if it wasn't for their sacrifice, we would not get to appreciate the freedoms that we in fact have. One of the things, I found this quote. There's a guy that I track, and he tracks me on Twitter. And I loved this quote, and I've used it with our Accelerate Marketing folks, this past week, just to share it with them. But it's a great thing. Bad habits are easy to form and difficult to get rid of. And if you've been trading for a long time, I'll bet you have some bad habits that you would like to get rid of, and maybe you're stuck getting rid of them. And that at all times, be discerning and wary of what you are rehearsing or what you're practicing, because sometimes that's the other way that bad habits just creep in, and all of a sudden they turn up, and you're going, "Wow, where did that bad habit come up from?" And you can see that, like if you get on a losing streak or something like that, where you think, "Well, I think I'm applying my rules properly," and all that type of stuff. I will bet you that something has creeped into your process of doing your trading that is in fact impacting and actually representing a bad habit. And unfortunately, bad habits, unless they are identified and journaled about, and then basically steps are taken to eradicate that bad habit, they will continue to mess up your trading. So just keep that in mind. And of course, our disclaimer remains the same. It's basically to say that we do this for training purposes, and that you should always paper trade any new method prior to the risk of your own personal capital. So the objective of today's session is to provide timely, actionable intel at the end of the week for those seeking to clarify, simplify market decisions so wealth can be multiplied. Clarify, simplify, and multiply is the motto of active trend trading. What I'm looking at for the markets right now, there's two different tones going on in the market right now, and we're at new highs. The question everybody asking is, but are we going to run out of momentum? And if so, what kind of a pullback can we be looking for? My adage on the market right now is that it needs to go down so it can go up. That's the essence of what we're looking at. So number two, we'll take a look at some stocks and ETFs. Let's see, Steve, let me go back over here. You're going to be talking about TTD today, right?
That's correct.
Okay. Well, we'll get that up we'll get that up after the after we do the real quick market review.
Sure.
TTD just reported earnings. Reported I think it was last night or first thing. No, the first thing this morning, and it got rocked, and then it basically did one heck of a rally after it. So we'll take a look at that. So let's get over here and take a look at what's going on in the market. As you know, if seasonality, it looks like it may be kicking in. So if that is the case, then we're going to look for an upside bias going into November, December timeframe. Here's where we're sitting. We're up about 23, almost 24% in active trend trading. We're working on a couple of different areas in that. And we're in the process of also doing some restructuring. I'll talk about a little bit later. Restructuring of the membership, which I think will, again, help to simplify and clarify. But here's where we were about 9 o'clock this morning on the indexes. You can see all of them up for the year. However, Russell not quite back up to its last year's high. And then, of course, if you are an active trend trader and even premium and or free newsletter, you have access to these our Power Rank and Elite watch list that we do every weekend. I go through over in excess of 500 plus stocks, and I go through 13 different watch lists that are premium watch lists that are put out by IBD to generate this list. And one of the things that we will be going into next year is we're going to offer just a basic newsletter to members for a very low monthly or yearly amount. But it's going to take these Power Elite list and the other Elite list that we look at and basically provide triggers in a newsletter format, kind of like the go, no-go table, just to be able to trade into these. We'll have some examples. Well, when we launch that, we'll have some examples of how it works. What would have happened if you would have gotten into the number one or just any of the stocks that showed up on the first Power Rank list of the year, which is like PayPal, which is like TTD and all that kind of stuff. Had tremendous runs, and that's what we want to be able to provide for people. But people who don't want to necessarily get into the nuts and bolts of the rest of the active trend trading system, that's going to be set aside for them. So let's take a look at the what is going on with the markets. Let's start over here with the spiders. As you see, I've added a couple of things back into the charts that I had taken off for a while for our for the folks who are going through the Accelerate mentoring program. And I've laid back in just for, FYI, the upper Keltner channel is a 3 sigma Keltner channel away from the 20-day moving average. In other words, that's 3 standard deviations away. As you'll see, 3 standard deviations away from this from the 20-day moving average tends to capture about 95% plus, maybe 98% of all market actions. When prices get up close to either the upside or the bottom side, oftentimes that is an indication that they're getting ready to reverse and come back up the upside. So what do I have on the SPY? What I'm looking at primarily is one, I have no momentum reversal in the TSI. I have no signal here on the daily chart. Matter of fact, yes, I have a high where I have a spinning top. We're starting to get several spinning tops up here at this high, reflecting what? It reflects that it's reflecting indecision, and that the SPYs are having a little bit difficult time pushing on up past the 310 level. And so, however, what I'm looking at is what's holding up. The 8-day moving average, the 20-day moving average, everything is stacked to the upside, but I just need some kind of a revert, not a reversal, but just a pullback into either the 8, the 20, or maybe it's a pullback into the midsection at about the 305 level for a continuation of the move up. That's the tendency that I see happening in the indexes going into the end of the year. Qs, the NASDAQ, similar type situation. Also, very extended away from the 20. One would anticipate a pullback into the 20 or approximation. This air gap right here that you see between the 20 and the 8-day moving average right there, that air gap is a fine place to find some support for a rebound back up to the upside. I would tick these off, Steve, I know you're going to be talking about individual stock, but I would tick these off, not make them mad, but I would put in little alerts right here at right around the 8. I would put in an alert right around the 20 and an alert right around the 50 period moving average or 50-day moving average in this case. All of them are EMAs. Because this is also showing us that, hey, TSI, while it is very much overbought, has not rolled over yet. There has been no cross. Now, when we do get a cross, there tends, and I'll take this one as an example right here. When there is a cross, and this was a multi-cross, cross down here, came back up and retested off the 2 sigma Keltner channel, and then reverse there. That was the sell-off that actually put us into a good setup for this next move up. So I would put an alert there because price action could turn around at either of those places. And I would, watch things to say, hey, how does it look like if it does break down between below the 8 and the 20? Is it giving us flashing signs that, hey, I want to fall further? And as you can see, if you want to take that analysis over here to the weekly chart, as you can see, TSI still pointing up, market forecast, the longer term momentum still pointing up, but approaching its limitations. No reversal signal on the weekly. A whole bunch of spinning tops, hanging mans on the NASDAQ as represented by the Qs. IWM, the last one I'll be talking about. IWM, not IMW, IWM. The Russell has been the kind of redheaded stepchild, if you will, of the indexes. And I like, here's what I like on IWM. Just take a look at where it's channeling at. We do not have a reversal signal per se. My TSI on a weekly chart has not rolled over yet. My momentum on a weekly chart is on the market forecast is still heading up also. However, I am still stuck in this range. Now, if we start to fail and roll over, the tendency would be for it to fall all the way back down to the bottom of this range. So in other words, roll from 158 all the way down to approximately 145.32, approximately. As you can see, there's a lot of support here, 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 plus price action support at 155, which is here. That could be the bounce spot to be watching for a relief bounce on IWM to take it back to the upside. Again, the tendency during this time of year is very simple. It tends to have an upside bias, which plays into the Santa Claus rally. And so again, as soon as I say this, the market is probably going to just take a huge, it basically dumped to the downside really hard. But for right now, I want to basically have a bullish bias and look to trade off of the bounces off the moving averages. Now, if I get up here and mess around up here again, and my daily TSI stays with a negative divergence, that would potentially change my mind a little bit, because you got to remember always that topping turns out to be a process, while bottoms on the bullish section turn out to be events and will bounce up to the upside. So that's what I've got on for the markets. There's not a lot to do until we get some additional directional information. I mean, so that's what I've got, Steve. I'm
Okay.
turning it over to you, and I'm going to pull up TTD.
Okay. I think you need to unmute me.
You are unmuted.
Okay. So we've got TTD. I think it's a trade I got into today. Let's look at the long-term chart, the weekly chart. We've just broken through an upsloping channel, and we look to be holding above just above the prior low that was in early April, mid-April.
Okay.
We're below the 50 MA or right around the 50 MA on the daily chart.
Correct.
And it's a place I like to look for relatively long-term reversals. This has been an IBD stock for well over a year, for about 2 or 3 years.
Yep.
It's pretty low in the IBD 50 list right now, but after the correction it's had, I like to look at this kind of action as for a potential long trade. We may be a little early in this process, but I like the fact that we reported earnings yesterday.
Right.
We met earnings, and we've had a very explosive reaction this morning. So just above the high of yesterday, that would have been at 195.04. I went long the stock this morning. It's then, it certainly bolted much higher after the entry.
Right.
Pulling back, looks to be holding. I've got a short leash on this stock. Right below today's low is my exit if we trade down there.
Okay.
Yeah.
So just below today's low, because today, because this is looking very interesting, because we had a hammer here from yesterday.
Right.
And then we get the
It's an
big
outside reversal day. Yeah.
Exactly.
A key outside reversal, which is very bullish from a technical perspective.
So Steve, does it bother you that you have a really long top notch here, long, head wick here on that, where prices got up close to the 50 and then sold off?
That doesn't bother me, at least mainly because we're holding above the 50% level of today's range.
Okay.
Yeah. So I still see the action is quite bullish. We've got another hour or so to go in the market, hour and a half to go in the market. It can certainly weaken. If it closes below yesterday's high, I'd be a little concerned. But right now I'm still bullish, and I think it's if one has not yet entered, this would be a great time to just get in at the market.
Okay. Now, just another question about that. Price actions are, currently for the last several weeks have been at or below the 200-day moving average, which I highlight there, and the 50.
Yeah.
Is that a concern to you?
Yes and no. Normally it would be very concerning, but the fact that this has been a IBD 50 stock in a relatively long-term uptrend, it does not bother me. I see it as a potentially.
Okay. So what would you consider a potential alternative? And so what would you consider right now an alternative entry on this? What happens if it gasses out and goes back down here and retests the 180 level?
If we retest the 180, form a spring at that level, a bar with a wick to the downside, I'd be looking for an entry at that level if we fail at these levels currently.
For an entry.
And I would expect 180 to hold. If it doesn't hold, then it's a little bit bearish. Yeah.
And so that would be one of those, if it doesn't hold, get the heck out of town.
That's
Great.
correct. Yeah. Yeah.
So, hey, I want to pop up a couple of the other, one of the trades that Steve talked about a couple of weeks ago was Ross Dress for Less. And the thing that I found very interesting about this, we came in and looked at Ross, and let me find it was
I
right
think
here. On this,
right
it was
there.
on the
Correct.
25th,
Yeah.
right here.
Right. Right.
And we went ahead and we entered a trade on that. Now, when we put a stop loss just slightly below these lows right here. So about 109-ish was where the stop loss was. I got stopped out. Now you re-entered this trade, didn't you?
Yeah, I also got stopped out, and then I re-entered the day after that wide range green bar.
This one or this one?
That one.
Okay.
On the following day, I re-entered as we took out that high.
Okay.
Traded above that high.
Okay. And so
we closed weak, but I stayed with the trade, and I'm looking at a potential exit, probably maybe later today or sometime on Monday, depending on price action.
And so, and that's one of the things I want to bring home to everybody. And that's one of the good skills that Steve brings to the table when we chat about these, is that he is very disciplined about, nothing happened here to change his beliefs about what Ross was doing, which is totally, absolutely correct, because what did Ross do? And I just throw a bone out here, is one, it held the 50. Yeah. Now, and then that rebound there, bullish engulfing, I'd be looking for an entry just on a retest back, to the midsection of that candlestick right there.
And that would have been a great entry.
And that would have been an awesome entry right there. In other words, big bullish candle, came back and retested, popped to the upside, and then from there it went on up. And if you just take from when it hasn't moved a lot, only like $1.53 or so, but even so, that's still heading in the right direction, and it's got a really good opportunity to do something prior to earnings.
Right.
And I'll just throw up flash a couple of other ones that you had talked about. I went back and looked at this one later, Steve, and as it turned out, I think this one was recommended, I want to say back in this area here or somewhere around here.
I think the prior low, but I can't recall for sure.
And so, but anyway, it put in a really nice pattern back up to the top. And this is another reason why I put the Keltner channels back in. Keltner channels offer a tremendous opportunity to at least quantify where you might want to take some profits off the table out. I'm not saying you want to sell the whole thing, but those Keltner channels if we know that Keltner channels, the 2 sigma Keltner channels, the two standard deviation Keltner channels, maintain about 90 to 95% of the price action. When prices get to the top, they can stay outside of it, but oftentimes you'll get a reversal off of that.
Yeah.
And if you want to sell on strength, they're a great, give it about 10 to 15 to 20 cent below the Keltner for your target. Sell part of the position. And then the way that works from there, Steve, and I just love doing this strategy. Like I said, I think let's say we got in here, we go up, sell half the position. We can hold the position. It's still profitable because we haven't taken out that.
Right.
Add back to the position here.
Absolutely.
We still have not taken anything out. And then we hit the Keltner channel again here, sell half the position. We'd still be in it until it craps out over here after earnings, or we would have probably sold it prior to earnings.
Sold it right as it broke that uptrend line. That would have been an exit, right?
So cool.
And and interestingly, we're setting up for an entry potentially on Monday. It's an inside bar after a good reversal doji bar, pretty high volume. If we break today's high on Monday, it will be a re-entry long for me.
Now I'm going to be searching this and waiting for my proof that momentum is shifted. So anyway,
if we break to the upside, that your momentum will reverse, I'm sure.
Yep.
Yeah.
Without a doubt. So
Yeah.
thanks, Steve, man. Like I said,
Okay.
always a pleasure and good stuff.
It's likewise my pleasure to be here with you.
Okay. So let's get on and we'll just knock out the rest of this, guys, just really quick. Again, I want to highlight to everybody that, I'm always seeking to clarify, simplify, so you can multiply your wealth. One of the things that we've found in working with, now that Brandon has joined me with the active trend trading system and evaluations and all that kind of stuff, we found that we needed to restructure our membership. Now, if you're already a premium member, you don't have to worry about this, but what we're doing is restructuring it so we can customize our what we're offering to cover either stocks and or options, and we're going to have a special offering on this prior to Thanksgiving. If you're already a premium member, you don't have to do a darn thing, because you are going to basically well, I'm going to give you an opportunity to, if you want to go to for a semi-annually or a quarterly or a yearly membership, that would be awesome. But with this, this will result in some different type of costing or pricing. But again, we're trying to customize it so that, if you don't want options, you don't have to do options. You basically just do the stocks. And so that'll be one service. If you want to have both stocks and options, you have that choice also by adding the option. So lastly, BAM meeting webinar, December 7th. If you need a speaker for your individual group, I am here. So yeah, Eric, gee, I would really love to speak to your Raleigh group, if possible, in the near future. And so if you have not seen it, I know some people have seen it, and I hope, and they actually have it in their hand. But we've come up with on Amazon, a trading journal. And so if you have gotten your trading journal and you have any comments on it, please leave them for the rest of people to see. But they come in two different sizes: a mini size, which is a 6x9, and a full size or a standard size, which is 8.5 by 11. Yeah, my son did an absolutely phenomenal job putting that together. So anyway, it's over 150, it's actually over 160 pages that you can utilize to fill out your, basically standardize your process. So, hey, that's it for today, my friends. I want to again thank Steve for being here. We'll be getting ready for the next for the final hour, starting up at the top of the hour. And as we move into this week, and remember that, it is Veterans Day. This is not Memorial Day. This is not Armed Forces Day. This is Veterans Day. And it's to recognize all those who have served in the military of the United States. And so with that, I want to say aloha, trade well, prosper, have a great weekend, mahalo, and God bless. And Steve, again, thank you very much for the join, and it looked really good today. So
my pleasure, Dennis.
okay, so
Have a good
aloha,
one.
everybody. See you next. Yeah. Oh, by the way, I am going to be traveling next week, but I'm still online to be doing Fridays. I've just, unfortunately, I don't know if when you join, but we've had my brother-in-law passed away this week, so I'll be in California towards in the midsection of next week, well, through the end of the week, and then going back to take care of my mom in Arkansas. So, but we'll continue putting out our information with active trend trading. So, aloha, bye-bye.